There we go. Morning, everybody.
Morning.
25th of March.
Good morning.
Signal Centre, Talking Ball. Joe Neighbour, Ian Coleman, Steve O'Hare.
Morning all.
Yeah, you're right.
Yeah, not bad. Not bad at all. So, what's going on? All okay today? Everything's fixed?
Oh, it's the
still a bit of a way to go, I think, on the equities, isn't it? I think
White House and Senate have come to an agreement, haven't they, eventually? So we've seen that nice dead cat bounce in equities.
It does feel like it's still that. Joe showed us a nice chart and the volumes are quite low, aren't they?
Yeah, so on Twitter yesterday, I found some gentleman that was saying that the move higher yesterday was very low in terms of volume, one of the lowest volume sessions over the last couple of weeks. That is not what you see at the bottom. So be careful. And also another tweet I found, it was one of the best 10 days on record for the S&P 500 yesterday. But if you look at the other 9 days of record gains, yesterday is not in very good company. They either all occurred during the Great Depression or during the global financial crisis.
Right.
It was a record day, wasn't it, since 2008 S&P yesterday.
So yeah, it's not in great company. I think there was a couple of 10 and 11% up days in 2008. Obviously, the ultimate bottom wasn't until March 2009. And a lot of big up days in the sort of 20s and 30s, which is what a few comparisons are being made to at the moment with this latest move lower. Should
we show that overlay chart?
Yeah, if you can.
This morning, let's have a look. If I get our Skype up, and then
don't get our Skype up.
No, just the picture, just the picture, just the picture. I guarantee it. Let's have a look. There you go. Where are you? This one here. So this chart here is an overlay of the 1929 sell-off recession. The blue line is obviously current day, and the red line is 1929. And if you see, overlaying quite well, and that didn't end well. So is this a dead cat bounce? And like Joe says, low volume.
Hang on, what happened after that chart finished?
Oh, it went through the roof. Shall I drop that down there, because that's really dangerous?
I'm turning from an ultra bear, obviously, now that we've had the first sell-off. Ultra bear. Now I'm looking to pick bottoms. It's like, what a bad way to trade.
Around.
I think we're looking at a drawn-out sell-off. We've had the huge sell-off now. And we're getting this bounce, but it doesn't look very rosy if you think about how it's going to impact the whole economy going forward over the next few years.
Restarting an economy after this is obviously going to be difficult. People aren't just going to go out and start hiring people straight away. You know, there's going to be trust issues there, so it's going to take a while. And there are going to be bear market rallies, and they are particularly vicious, and they'll suck people in. And potentially spit them back out. So just be careful. I don't think, we're at bottom yet. And I think I don't want to commit to anything long term really at the moment.
No.
Maybe gold or silver, but that's about it. Shall we have a look at how we did yesterday? Because we had a pretty good day on the old gun to the head challenge.
I'm going to have to let Joe take the honour this morning.
I'm still called Steve O'Hare, am I?
So we had 3 trades yesterday, as always. I went long of the DAX on an inverse head and shoulders pattern. Can you see that as well?
Yeah. Lovely trade, mate.
So it's just gone up in a straight line, which doesn't often happen, but when they do, obviously I'm very grateful for that. And that was a 7.16R return. Steve had a long in silver, which is a 1.53R return, and Ian was short of euro sterling, which is 1.87. So all in all, a real nice
be our best day ever.
It's got to be close, yeah. A real nice tick up in the P&L. With just under our previous high that we set back in the end of February.
Top.
We're just ahead. Just made a new high.
Nothing like building the viewers with confidence.
Double top, careful. I'd sell all these trades today.
Going to wipe out today.
So a nice bump up across the board. So well done, gents.
Well done.
Trades today. while I've got the screen open, let's have a look. That's looking pretty good. NASDAQ was looking quite good. Whether I want to jump on that or not, I'm not sure. I think I was looking at dollar index, which looked quite interesting, potentially forming a bit of a top. So I'm going to go with that, I think. The engulfing candle on the hourly. Obviously, we've got 9 minutes before that closes, but I'm going to jump on there. I'm going to sell it with stop above. Let's go 101.68. That's fine. Where are we targeting? Okay, let's target down there. 3R.
That's perfect. Can I show my dollar yen and my my dollar chart now?
Yeah.
Because that just about mirrors up with what I was wanted to talk about 30 seconds ago. So.
Okay, 101.25, selling, stop.
Lovely.
101.68. Boom.
Boom.
Okay, so share. So this is what I've got for the dollar. So this is our bespoke support here at 99.99, which I think is Joe's target. We've also got a 161.8% extension of this level.
So I knew all those hidden fibs were there. So
you did.
It's just inbuilt up here. It knows where they are.
Sent it to you earlier, and then you've got this 224 extension at the big figure. So basically, you've got a massive confluence area here, and we are starting to look lower. And if we go to all the other pairs, they all line up. Euro dollar is the confluence area up here around about 109.33. Cable is already in a cipher pattern, and the target level is here at 120.83 with the bespoke resistance just above it. And dollar Swiss is very similar to the dollar index. So the one that I'm going to go for, because euro sterling is moving lower, I prefer sterling higher than euro higher, if that makes sense, correlation. So I'm going to keep on going with this one and try and get in as quick as possible. Not going to last long. 2.84R, getting long at 118.98, is it? Live. Targeting, I'll go for 121, the figure, because it's just above. We'll have a 50 tick stop. Try and make it a bit more. 4R.
Nice.
Lovely.
We got Steve.
Here we go. Share my screen. Just looking over yesterday, I think we had we were in this triangle formation in oil. I was trying to buy the dips yesterday just for this rally higher, and I'm sort of a little bit concerned about this. Almost like it could end up being a double top formation if we break below the $23 handle. I'm looking to sell a rally actually, and that just been a bit more cautious. Copper actually, and we sort of caught the copper quite nice on the intraday trade. And again, you've sort of seen it stalled around the previous swing high. So this is only hourly charts, but a ascending triangle formation could be a bit bearish if we break below here. But I'm looking to sell fade this trade basically. Gold and silver have been really, you saw the spreads widen dramatically over the last couple of days. Obviously in gold we had this descending triangle, double bottom, traded lovely. The measured move target for that double bottom is 1660. So I think still we've got potential to push a little bit higher. It feels a little bit more of a safe haven asset, but obviously we talked about the VIX is still quite elevated. So dollar is the leader in the safe haven at the moment. Silver, we had this like quite a crude reverse head and shoulders yesterday because we were talking about reverse head and shoulders thing, and that's looks to have achieved its target as well.
Yeah,
but it's so still fancy buying a dip in that, but we'll see how this plays out. Price actually plays out this morning, but the spreads are very wide in the metals, so be very careful. So I think the trade I'm going to go for.
There was an explanation I saw. I think Bogdan sent it around yesterday on the Zero Hedge website about what was going on with gold and silver. that there was just no physical stuff around it. No one can move it about because obviously there's no traders in.
Yeah, I think it's also because if you think about it, the physical price isn't leveraged up like the ETFs and the CFDs that can be leveraged, and yeah, you've got sort of a huge position built, sort of been drained out of there, but the physical gold is still worth a lot more money. So you're getting that detachment in prices, which is something that we've never seen before, I don't think.
No,
so if you could actually sell
30 years.
Yeah, I mean, if you could actually sell physical and buy the futures, there may be a sort of like arbitrage trade there. Yeah. So
is gold getting bought up dramatically though because people are worried about what the Fed are about to do?
No, I don't think it's dramatic, but I just think there's a sort of like a value that the cartel probably put on it. So and they're going to be supportive of it if especially the miners and things like that who rely on that. But obviously mining's stopped. But they need that gold price to stay elevated because that would have a massive impact because they're probably leveraged on that themselves.
Mm-hmm.
So I'm going to go with oil. I'm looking to sell a rally in oil, but I quite like this $25.14 level in this one. So I'm going to set my short here. 24.55 is it? $24.55. I can do the stop just above. I'll do 25.15. Is that too tight? That's pretty tight, isn't it? 25.25. That's still really tight. And I'll target $22, so I'll get a 3.64 out of that. Yeah, I'm happy with that one.
Okay.
Unshare.
Okay, so obviously we touched upon indices. They're all flying higher. They all look pretty good and suggest there are some bottom patterns that have formed in the very short term. But by all means, get involved. But I don't think you need to be hanging around in those for any length of time. It is, I think, just a bounce at this stage.
Dollar yen, we're seeing an ending wedge, so I don't know. There's a correlation gone, but we've sold it this morning at 111.55 and it's now trading at 32. I just wouldn't be buying stocks, not now.
Well, the volatility is still through the roof, isn't it, on the VIX? So they're talking about obviously this package that they're putting together. Some saying it's 2 trillion. Others have quoted $6.5 trillion. I don't know if any of you have seen that. It was sort of
I haven't seen that one.
4 trillion in terms of what they're buying into assets, but then another 2 trillion on top of that in terms of other forms of stimulus. So, the word trillion being bandied about quite a lot. And someone put on Twitter yesterday, which I found fascinating. Not really thought about it before, but just for some context, 1 trillion seconds. Do you know how much length of time that is? 1 trillion seconds in sort of months or years or
a few hundred years.
31,709 years.
All right.
What?
Yeah, that's 1 trillion seconds. So, puts it in a bit of context what they're throwing at the market. And then obviously, is that a concern for potential hyperinflation down the line by printing so much money?
Definitely that's going to impact at some point, isn't it? And that's where we sort of like get this bounce. People are going to start to forecast again properly and look into the future and think, oh, how are we going to manage that?
Yeah, it's a bit of a concern. So,
I just noticed the postman just delivered his mail. I don't know what he does then. The dogs didn't even hear him. So he's obviously been a lot quieter.
Maybe it's because you're all at home and the dog feels a little bit less anxious. Hello.
Come on, Curly.
You've been spotted, team.
Curly poked her head in. There's 3,000 people watching this team. We can hear you swearing as well.
Anything else to add on what we've seen? I think we're going to try and get this bill passed today by the looks of things.
Yeah. I think a bit of relief from it, but realism will kick in at some point.
There was a bit of a respite, wasn't there, in Italy? The fatality rates were going down, but then it hit a record number yesterday, along with Spain.
I think the new cases were going down, but the fatalities were still curving up.
Going up, yeah.
Yeah, average age of Italian fatalities?
Haven't seen it.
85, someone told me yesterday.
Okay, good year.
Yeah, they're saying a lot of 20, 30-year-olds are getting infected now. Though.
Yeah. Probably handle it a bit better, I reckon.
Yeah.
Um,
Bank of England talking about some possible more QE tomorrow, so we'll keep an eye on that. Data-wise today, we've had German EFO just come out. Has anyone seen what that came in at?
I can tell you.
I was so engrossed in watching you, Joe, I missed it.
86.1. Was expected 87.7.
Okay, so under, which isn't a surprise. Yeah. UK CPI at 9:30, US durable goods at 12:30. Then we have oil inventories at 3:30.
Lovely.
Yeah, so I guess let's wrap it up for the day.
Okay,
cool.
Brilliant.
Do some more webinars later, are we?
Yeah, I'm going to do, well, I changed my mind halfway through yesterday because I was writing it. I'm either going to do trend.
Okay.
What's a trend? How we define it? How we differentiate them? Time frames. And also I'm going to look at support and resistance maybe tomorrow. Okay,
I'm going to look at some stop loss placements and some info about stop losses. And Ian, you got anything planned for us?
He's gonna.
I'm looking.
He's gonna make something up now that we've never heard of.
Multi-time frame analysis. There you go.
Lovely stuff.
I'm going to go for that one.
Okay, D-mark. Are we allowed to do D-mark?
Yeah. Do you like?
It would take me all day to write it though.
Maybe I have to get permission. You do a basic D-mark.
No, I don't. You have to get permission to teach it. You just maybe got to get permission for the indicators, maybe.
Yeah.
Not sure.
All right, guys. Well,
all right.
Yeah, catch you tomorrow.
Yeah.
Okay,
guys.
Have a good one. Bye.
Enjoy.